Welcome back, Top Floor Traders. Today we have a video on SMT. So you might have heard this word thrown around all over social media, but you don't know what it is. So today we're going to go over it. Hopefully you can learn how to spot it and use it for entries and just in general when you trade. First things first, SMT stands for Smart Money Techniques. It's a term you'll often hear when traders are talking about price action and market behavior. It refers to a situation where two related assets or markets are showing opposite trends. This can happen in Forex, stocks, or even between different time frames. When SMT occurs, it signals a divergence, meaning one market might be going up while the other isn't. It's kind of like an alert that tells you when to pay closer attention. So as you can see, I also have an example drawn out for y'all. Imagine you're trading NASDAQ. And as NASDAQ is trending upwards, ES, on the other hand, begins to trend downwards. When this happens at the same time, this is what's known as SMT. As a day trader, this can be a huge signal that something is about to take off in the market. So you might want to take a step back and reconsider your position before taking a move once you spot this SMT. So basically, when you see this SMT form, and we have this drawn out with this blue line, so what SMT looks like is right here on NQ and ES. These are both the same swing highs. As you can see, NQ is trending upwards and takes the swing high, while ES begins to trend downwards and does not take this swing high. This is what's known or shown as our SMT. SMT can be seen as a red flag for potential reversals. As you can see, after this SMT is formed on NQ and ES, both of them begin to trend downwards, not just ES. So this is important to us as traders because trading on mismatched trends can give us clues about market sentiment and the strength of a particular move. If you see a SMT pattern forming, it can be a sign that one asset might soon catch up to the other. For instance, if NQ is lagging behind ES, it could be ready to break out and catch up. Or if it's outperforming ES, it might be due for a pullback. Understanding SMT gives us more context about market dynamics, which can improve our ability to make informed trades. Okay, so now we're going to look at a live example in the real market. So on the left here, we have the NASDAQ. On the right, we have ES. As you can see at this swing low, it's the exact same swing low on the left and on the right. You can see that NQ took this swing low while ES failed to take that swing low. As you can see, ES was lagging very, very far behind. Now that we saw this SMT form at the bottom, you can see that the market began to push up. At this moment in time, we could have seen this SMT form. We could have seen how price respected it. So if we were in shorts and we saw this SMT form at the bottom, this could inform us to cut our position for full take profit and not run the risk of getting reversed. Or let's say we're looking for longs. If we saw this SMT form at the bottom and price respected it, this could have been our signal to finally enter to go long, using SMT as a confluence tool to improve the quality of our setup. So here's an example on how I would trade this. On the 1 hour, we have some SMT here. NQ did not take the low of this candle, while ES did take the low of this. So now we're going to zoom in and I'll show you how I would enter. Okay, so we're on replay mode. Higher time frame on the 1 hour, we have this SMT put in the bottom. We have this 5-minute fair value gap that was refined from a 1 hour fair value gap. On the higher time frame, we are looking ready for a bullish flip. So in my mind, since we are bullish high time frame and we have a few clues that we're ready to flip, such as SMT and a higher time frame fair value gap, I'm going to wait for a close above this fair value gap right here as confirmation for bullish continuation. Okay, so we got a close above. Now I'm going to use this as an inverse fair value gap. And since this is just replay mode, I'll take an entry right here. Usually I trade with 2 contracts. And I will put my stop loss, we'll put it right there at the bottom of this candle. Now, since this is during Asia session, it is more likely to consolidate, but this was just the first example I could find of a SMT. So I'm going to move us to the higher time frame to watch this play out in action. I'm just going to aim for these highs right here. And let's see how that goes. Okay, so we did get taken out here. So we did get taken out a little bit early for profit for 4,300, while NQ did take our full take profit. But that's just a quick trade showing you how you can use SMT as confluence to enter your trades. To wrap it up, SMT is a powerful tool for us as day traders who want to stay ahead of the curve by recognizing where the market leaves its imbalances. Using SMT is kind of like looking into the future, but not really. It just gives us potential opportunities that might come up very, very soon. Or, on the contrast, it might help us avoid risky trades altogether. Just remember, it's not about spotting the trend, it's about understanding the story behind price action. You always need to have higher time frame context when using SMT. It's not just about the pattern, all right? So if you found this helpful, I would suggest just spotting it in your own charts. Learn to catch an eye for it so you can spot them really fast. If you need more help, just message me. I'll go over this again. And yeah, just take care, y'all.